What is going on, traders? Welcome to episode 1 of the Forex Bootcamp Series. So as I've told you in a previous video, I forgot which video exactly, but I told you guys that I was going to start a Bootcamp Series teaching you guys about the markets. Now, this is episode 1, and throughout this course, this mini course, I'm going to be teaching you guys everything that I know about the markets. Not to say that I know everything about the markets, but I'm going to be teaching you guys everything that I know throughout my experience. All right, I'm going to be teaching you guys my experience basically of years being in the financial markets. So this is episode 1. This is key levels, and let's go ahead and hop into the video. So with that being said, we're gonna go to the back testing session, and we're gonna do gold. My favorite pair, gold. It's either you love or you hate gold. There's no in between. All right, gold is one of those pairs where you just have to accept it. All right, you just gotta. It is what it is. That's all it is. You can't say much more about it. Now, first thing about the markets: understand that the markets don't just move randomly. All right, there are trillions of dollars moving a day, and there's no way you could tell me that trillions of dollars a day are moving randomly. Absolutely no way. There's no way they're gonna let trillions of dollars just randomly move throughout the markets. That is not the case. That is not going to happen ever. All right, so understand that. Now, once you understand that maybe there's something behind the markets that causes it to move. All right. What causes the markets to move from one direction to another? Fundamentals, of course. But if we're talking on the technical side, you can realize that even just looking at the markets, you see that the market doesn't go in one direction, right? Just looking at this, you see that it's up, down, all this, up, down, up, down, up, down, up, down. Now, the reason price is bouncing like this is because of certain price points that it gets to. The reason you see these up and down movements in the market is because of the certain price points that this market gets to. You can see that it causes it to either fall, right, from there, or shoot up, right? Now, these are what we call key levels. These are levels in the market that price reacts to. All right, understand that. Key levels are levels in the market that price reacts to. So make sure you guys are taking notes. Make sure you guys are, or if you need to, you can watch this video over and over again as much as you need to, as long as it sticks. But again, key levels are levels in the market that price reacts to. Now, I want you to notice something very important. As I told you guys before, the market doesn't go straight up or straight down. There are certain places where price stops and potentially reverses. All right. So as I said before, like this right here, this high right here that you see, let's pay attention to this drawing that I just made. This high right here, the reason it shifted from up to down is because there's a key level. This right here is a key level, this price point. So if we go to all the way to the right, you can see this is 1381.98. All right, let me zoom in a bit. If that helps you out. 1381.98 right here on the green. Same case with the others. The same reason why price reacted from here is because this is a key level. All right. Now, I'm just making this up. We're going to go into the live markets, and I'm going to show you exactly what I'm talking about. All right. Because there's a key level at 12, let's say 1292, 1292. All right. And that's ounces. That's dollars per ounce for gold. Now, again, key levels. Let's go ahead and hop into the live markets and understand key levels exactly. As you can see right over here, you can see that price goes from up to down, right? So we can potentially mark this as a key level. Now, when you go to the right, oh, I'm blocking it actually. There you go. At this level right over here, you can see that price goes from up to down, right? All right. So we can potentially mark that as a key level. Now, what confirms the key level is the fact that price gets to that point again and does the same thing. What confirms a key level is that price gets to around that same price point, all right? It doesn't have to get exactly to that price point. If price gets around that same price point and does the same thing again. Now, if we scroll to the right, we can see price does the same thing over here. You see that? And then we keep scrolling to the right. We see price does the same thing once again over here, and so on and so forth. You can see it does it a couple of times over here too, twice over here. So we can mark this as a key level. Now, for me personally, when it comes to the monthly, weekly time frames, sometimes daily, I'll use this tool right here. It's called a horizontal line. All right. So I'll place something right over here. I'll just place a line there. So I know that once price gets there, I can expect price to do the same thing again and again and again. It may not do the exact same thing, but it may. Well, I'll talk about it later. Support and resistance. Key level. All right. So we are at a key level right now, looking at price from here. So try to find somewhere else in the market where price does that same exact thing, whether it goes up or whether it goes down, whichever case. If we take a look, let's just see right here. As you can see, this right here, price bounces off. Same thing over here. Same thing over here. And if we go to the right, same thing over here, same thing over here. So we can market that as a key level as well. So we're going to put a key level about right over here. All right. Now you can say key level and support and resistance goes hand in hand. Support and resistance. Understand this. As I said before, price does not always go up and down. You can see price fluctuates. Now, resistance is when price reaches a ceiling. So let's say price is trying to push up, it pushes price back down. Price trying to push up, it pushes price back down. Price tries to push up, you may see it push up a little bit, but eventually it pushes price back down. This is what we call resistance. Resistance is simply the ceiling of price. All right. That's the highest that price, that's the ceiling that is stopping price from going higher. And you can see right here, if you guessed it right, yes. If you said this is resistance, you guessed right. This is resistance. This is resistance because it's stopping price from going up further. Now, support, you can imagine, is the opposite. So if I invert my chart, I just inverted my chart. I'm going to invert it back. All right. You can see what is pricing. Price is stopping resistance. Support. All right. Is what stops price from going down. So resistance is what stops price from going up. Support is what stops price from going down. You can see price try to break down into here. It stopped price. You can see price tried to break down into here. It stopped price. You can see price tried to break down into here. It stopped price and pushed it back up. All right. Each time it pushed price back up. Each time that price got to support, it pushed price back up. Now I'm going to invert my chart back. All right. So again, recap. Support and resistance. Resistance is the ceiling of price. All right. It stops price from pushing up. All right. Stops price from pushing up. Support stops price from going down. All right. So we have support right over here. So it's supporting price up. It's holding price up. All right. It's holding price up. You should be able to see my hands. It's holding price up. Resistance, pushing price down. All right. Pushing price down. No, you can't go any higher. You cannot go any higher. You cannot go any lower. Support. You can't go any higher. Resistance. All right. Now, once you guys understand that, there's not much to think about there. Support and resistance. Basic. As I said before, you can now see it a bit clearer now that I taught you what support and resistance is. You should be able to see a lot more clear now. That this is resistance, 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 this is resistance. But what happens? You can see here that, let me make sure you guys can see this. At this point right here, right? And at this point, price was resistance, right? Price was resistance. It was stopping price from going up. But once we got to right here, you can see that same key level became support for price. Isn't that amazing? Resistance can become support, and support can become resistance. Let me say that one more time. Resistance can become support, and support can become resistance. All right, and this is a picture perfect example of what I'm talking about. And you can see some more support over here. Again, this is stopping price from going down. All right, this is stopping price from going down. So you can see that price fluctuates within these key levels. We can see that something is happening at these key levels. All right, like right here, let's just say right here, there's not much going on. Like if you, let's say if I draw this, I draw something like this. You can't draw a key level right over here. There's nothing going on here. Like just a straight line up. You understand? It's just a straight line up. Nothing is happening right there. But once you start to understand and see where price fluctuates, look, beautiful, 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 beautiful. Resistance over here. All these were support, 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 support. Let me place a line right there so you can see it better. Now you should be able to see it better. I know all these circles are confused, might be confusing you. I'm trying to get rid of them. All right, you should be able to see it better now. So we got resistance right here. Price got to it. You see price pushed up. It shot price right back down. And even though price broke through it, at this point in time, it was considered resistance. And then what happened? We had a little bit of resistance over here. Then it became support. Support. You can see this nice wick. Support. So it's holding price up. Price can no longer go below it. So price broke back below it, broke back above, and it became support. Beautiful, right? Now, I want to talk about rounded key levels a little bit more. Same thing as key levels, but understand that, you know, as humans, we intrinsically like to work with, you know, whole numbers or round numbers. Like we don't like working with decimals too much. We don't like working with the numbers 3, with the numbers 4, the numbers 7, the numbers 8. It's easier to count by 1, 2, 3, 4, 5 than it is to count by 3, 6, 9, 12, 15, 18. You see how I had to sort of pause in between in order to see what comes next. Banks like to work on whole numbers, whole levels. All right. They like to work on whole levels. So what does that mean? That means that this 1904.09 level, we can turn that into just 1904 flat. Or you can even turn it into 1905. All right. So in order to do that, you put the line, you double tap it, and then you might see it somewhere else. Here, go to coordinates. On one of these tabs, you're going to see coordinates. Go to coordinates and just put, you can put a 0 or you can just leave it at point, it's 1905, and it'll automatically even out to 0. So look how beautiful this is, this 1905 level. Let's follow this across. Look how beautiful this is. Oh, I zoomed in a little too much. Look how beautiful this is. See how price is reacting off of it so clean? Look at this. Look at this. Look at this one wick right here. Look at this one wick right here. Look how clean that is. You guys see how clean that is? Rounded levels. Look at these wicks over here. When you start to understand trading, it gets very beautiful. Even though trading is boring, trading is very beautiful. Look how beautifully these candles just wicked off the 1905 level. Just look at these wicks. Look how nice they land on the 1905 level. Look at this one. You just have to be in awe of how amazing it is when you start to understand trading. Look at this. Look at this. Look at these wicks. All right, that's enough. So you guys understand the point. All right. Whole levels just make it that much more crisp. All right. So even though you can use, I don't know, 1905.1, 1905.3, it's a lot more smooth, for lack of better words. It's a lot more smooth when you even out your levels. So we can turn this 2036 into a nice 2035 or even 2040. But 2035 is closer, so I'm going to do 2035 ounces or dollars per ounce gold. Look how beautiful that is. Look, it's set right. Look, that candle closed right below it. It pierced through and closed right below. Look how beautiful that is. Oh, you guys can't see it. Hold on. All right, now you should be able to see it. Look how beautifully that candle just sitting right below it. All right, nice wicks, beautiful wicks. And then when you go to lower time frames, you can do the same thing, same exact thing. I'm on a weekly right now, but on lower time frames, you can do the same exact thing. So let's mark a couple more key levels just so you get the hang of what I'm talking about. So we can do 18. You can do 1820. You can do 1825.5. That's a clean one. All right. I just want you to see how beautiful 1820 you can even do. I like this right over here. 1829 you can do if you want, or 1830. Look how nice these wicks are. Take a look at it. I know I'm repeating the same thing, but I just want you guys to understand the crispness of when you use whole levels rather than just plotting your horizontal line smack dab out of nowhere. All right. Look at this. Look at this. Clean. Look at this wick right here. Look at these wicks. Look how beautiful that is. Just take appreciation for how, like, your charts will become a lot more beautiful, a lot more clean when you use whole levels. All right, look at this. I hope I'm getting the point across. All right, so make sure you guys use whole levels and combine that with support and resistance. Now we're gonna do a mix of both. All right, so we talked about key levels, we talked about support and resistance. I don't want to get into too much in one video, but I hope this video made sense for you guys. I hope you guys got something out of it. All right. If you didn't, watch it again because there's definitely a lot to take out of this video. So let's just do a quick recap. Support and resistance. Resistance is the ceiling of price. Like, you can't go higher. Support is holding price up. You can't go lower. So it's pushing price up. Resistance, pushing price down. You can't go any higher. Support, holding price up. You can't go any lower. All right. We talked about support and resistance. We talked about key levels. We talked about rounded levels. All right. That's the whole numbers, 1905. And I want you guys just to don't do too much. Just plot it and then plot it on a round level and just zoom in and see how nice, how detailed it is. All right. That's all I want you to do. Again, hope you guys enjoyed this video. I will see you guys in the next one. Let me know if you guys like the bootcamp series so far. I know this is only episode 1. But let me know if you guys like the bootcamp series. And I hope you guys stay tuned for the next video because I've got a whole course coming out for you guys on YouTube for free. All right. So make sure you guys stay tuned. Make sure you guys are taking notes. Make sure you guys are back testing, most importantly. That's the most important thing to do. Back test. You can watch this video as many times as you want, but if you're not putting it into practice, it means nothing. So hope you guys enjoyed this one. Hit the like button. Comment down below. Let me know what's up. If you didn't like it or if you think I could have done something better, explained something better, leave it down in the comment section below. I'll see you guys in the next video.